Liz, are you a basketball fan? I am going to mention basketball at some point. So you are.
I am.
Yeah.
Yeah.
Ali, I know you went last year when the Wolves were in the finals. You went, didn't you?
No, I would have loved to go. But
I
no.
was at Game 7 in Denver when the Wolves beat the Nuggets.
Oh, you went to? Oh, right.
That was the best. I mean, and then I haven't gone on this series. The last series we went to Game 5, but we go have partial season tickets. We love the Timberwolves.
Yesterday was a little tough though.
Yeah,
so
it was very tough. A little heartbreaking.
So maybe it's a little bit of a sore point over here. But
I'm a massive basketball fan, so I'm gonna do it. Just talk about it, but I'm not sure. I'm in the middle. Oh, here you go. It's 8 o'clock. We could let people in.
Yeah,
we can do this on the call.
You ready for me to admit everybody? All right.
Am I doing the sharing too, by the way?
Yeah. Do you want to test that first?
Yep. Cool.
And then I'll wait and I'll let everyone in once you've done that.
Is that working?
We can see your whole screen. If you can share your actual PowerPoint slide, like play your PowerPoint. That's it. Yep, that's perfect. So I have actually spotlighted you three as well, so you'll always be visible to everybody, the three of you, as you're talking. Okay.
Oh, great. Thank you.
Do you want me to leave the slides on just right from the start?
Up to you. I think then they can see what they're coming to. I think that's great.
Yeah, I'll leave it on at the start. I might turn them off at some point, and hopefully not crash it.
Cool, as long as you remember to go back to full screen, you should be fine. All right, I'm going to admit everyone, ladies and gentlemen. Here we go.
Good morning, everyone.
Morning.
Or good afternoon, Riley. I thought we'd let you in last. Welcome from. Are you in Philly?
I am. Yeah.
Yeah. Welcome.
It's good to see you again, Bruce.
Yeah, you too. We're just letting people in now, so we'll get started in 1 minute. I'm just going to see if I can see who's joined.
I'm just going to mute everybody, but when you want to talk, just unmute yourselves. No worries at all.
No worries. Okay. Everyone can see that. Well, welcome everyone. Thanks for joining us. My name's Bruce McFarlane. For those who I haven't met, I'm the CEO of BDC Partners. I'm also a member of the Victorian State Chapter Committee for the FCA. And I guess for the purpose of this call, I'm a partner in a business called Zoracle Profiles, which is a US-based franchise assessment tool. I'll introduce our panelists today. So Ali McElroy. So Ali is the founder of Kaleidoscope Growth Advisors. She was previously with a company called Lift Brands. So she was the president of International and then the chief legal officer. And for most of you in the room who are Australian brands will know the Lift Brands. And so Ali did spend a lot of time working across the Australian businesses. Welcome, Ali. And then we've got Liz Dillon. So Liz is a partner at a law firm, Lathrop GPM. She is also globally ranked in the top 30 franchising lawyers in the world. So welcome, Liz.
Thank you.
Now we're going to start. So today's topic is who's going to win the NBA Finals. So we're talking basketball. So both Ali and Liz are in. They're Timberwolves fans, and they had a bad day yesterday. So we're going to talk basketball. So we've got 4 teams left in the NBA. So I know we've got some NBA fans around. So we just want to know, Riley, I know your team's out. So who's left? Who's going to win?
Definitely not the Sixers. Not even close. I think the Thunder. The Thunder have it. I can't possibly root for the Knicks.
We've got 2 Wolves fans in the room here, so we've got to make sure that we're looking after them.
There's still hope.
Still hope. I should have done there we go. My slides, there we go. So like Eddie Murphy in 1988, coming to America is our topic. So many Australian franchisors see the US as the holy grail in franchising. And so lots of investment around what to do, how to do it, when to come to America. And so each year there's 30 or 40 Aussies that head to the IFA to learn about what's the trends in franchising from an American point of view and think about bringing their brand into the market. Many Australian brands have successfully done it, and we've got a couple of them on the call, and we'll hear about that today. And a number of brands have failed dismally and spent lots of money going to the US market, not really appreciating how big and difficult the market is. So I might just quickly ask a few of the Australian brands here, and I can see some of them have joined. So Carlos from Chartime. So you in the US market, how many got? I think you're on mute there. If you can talk, but how many US locations have you got now, Carlos?
Morning or afternoon, depending on where you are. We're currently operating 15 units across the US,
Cool.
with another 11 to open before the end of this calendar year, with then a significant pipeline development sitting behind that.
No worries. I'll let you go. Driving to work. Don't crash the car. And Studio Pilates. John, you're also in the US. How many outlets? How many sites do you have open now? We got John. You're in the car as well, driving down to Brisbane.
He's on mute. Let me unmute him.
Oh,
I think you can.
no.
I can't actually. No,
Okay.
he'll have to do it himself.
Okay, John, we'll listen to you later. Who else have we got there? We've got Callum and MC, have we, from Noodlebox? So Cal, how are you also on mute? Well, morning.
Yeah, mate, can you hear me?
Yep.
Yeah, so we've got 3 pop-up locations in Texas at the moment, so doing some menu development, trialing out our menu there. And we've got a humble goal of opening up our first flagship bricks and mortar location in the next 12 months.
No problem. Thank you. Welcome. And then I'm not sure if Jason from Baker's Delight's on the line, but Baker's Delight, I've heard the founder Roger speak a few times about his attempts into the US market. I think they failed maybe 2 or 3 times. You might know that, but they failed 2 or 3 times. But then launched in Canada with Cobbs, and there's about 250 Cobbs, and there's quite a few in the US. So I'm not sure if Jason's joined already.
Not yet.
But that's a number. So, and then we've got other brands that are sort of on the call looking to launch and also have international presence. I don't think Selena's joined yet, but KX are in a number of different countries already as well. John, you're off mute there, John. How many have you got?
I found the right button at last. Yeah, we're now up to 16 open and operating in 8 different states, and we have 21 on the slip on the slips for the rest of this year, and a pipeline of probably another 20. Like I guess other colleagues in the industry, we import our reformers from China. So we've had a little bit of a wobble, but I think we've managed to iron out the issues, having discovered that our reformer shells are made with American maple. So that's going to sort of help us out a bit. But yeah, we're coming along very well. It's definitely where the main growth from now on is going to be, despite the fact we've also just gone into Canada very successfully with 2 new studios, and the UK, where we have 4 with another 2 in the pipeline.
Cool. Thanks, John. So today we're going to hear from Ali and Liz to set the scene with some background on franchising in the US from a commercial point of view and also from a legal point of view. And we've allowed for plenty of times for questions to go into topics like, as John touched on, we might talk a little bit about tariffs and the Trump effect at some point, because obviously it was a big topic of discussion for all businesses, but particularly Australian franchise businesses. But really, some of the things around getting started in the US and what's the right model, and then growing the brand in the US. And if we get time, we'll do things like access to finance and private equity as well. But I might just go, we're going to go to move my slides along. Let's hear from Ali first.
Thanks, Bruce. Thanks, everyone. Well, it's great to hear there's so many people on the call that have real world US experience, and it sounds like some new also. So hopefully some of what we have to set the stage here is familiar to you, and we won't spend a lot of time on some of the preliminaries. We're going to get into the conversation. But to set the stage a little bit, just in looking at the US market, it's a very large market, kind of similar to Australia in that it's pretty urban and suburban. Over 80% of the U.S. population are in urban and suburban settings, with the balance in more rural settings. We're also, despite some of the headlines in the news and the challenges, while the economy is not growing as quickly as it has in some other periods, it's still growing. And one thing that's kind of interesting and that I really appreciate being in the franchise industry is that franchise expansion is growing, significantly outpacing general GDP growth. So kind of last year was over 4%. We're expecting that. So we're a lot of opportunity and growth specifically within the franchise sector. And then within different sectors, maybe a little bit of difference there, but from the big picture, we have that really strong consumer spending power. We're seeing some differences in economic, impact at different levels of the consumer economy, with kind of mass market being maybe a bit more challenged than some of the high end as we deal with inflation and some other things. If you talk to US franchisors about kind of the things that are top of mind and the biggest challenges for them in the US, kind of the bottom row of the slide you see on your screen would be pretty high on those, is labor and unemployment, staffing, and the conversation there is shifting a little bit from availability of staffing to cost of staffing. Our unemployment rate is still pretty low and at pretty historic lows, but the cost of staffing is the concern. With this group, I guess I'll just say that when you look at cost of staffing in the US versus Australia, there's a significant difference there. And so if you're operating with a staffing model that is at, and you're running a business that's working in the Australian environment, I think you might be pleasantly surprised at the cost of staffing in the US market. We have the opposite conversation when we're moving the other direction, but that's a concern. Retail vacancy is a huge issue. The vacancy rates are at historic lows. They've bounced back just a touch. They were under 4% for most of the last couple of years. So we're seeing a little bit of retail vacancy bounce back, but some pretty disparate numbers depending on kind of what kind of retail. So we can get into some of those differences down. But again, based on my experience in Australia versus US, historically, I'd say if you're operating in the Australian retail market, you're not going to be terribly shocked by the US market, and it would have maybe look even a little bit better to you. But in the US market, where it's just not what we're used to, so that's a huge concern. And then inflation rates, inflation has, I'll touch on that. Inflation has come down. That the tariffs, the uncertainty, we can get into some of that, but inflation is still a concern. And really, it's the initial cost of investment, kind of the higher build out costs, and is probably not surprising, but that has had a significant impact, along with timelines really extending. In addition to the costs increasing.
Ali, just for your background, we did in a Victorian breakfast, we talked about the Fran data information for the US, so the report that was released in the US. So if anyone that wasn't, and I know there's people from all around the country, so if anyone wasn't and doesn't have access to that, people that were IFA have all got that access to that report. But that's interesting about the growth of the US franchising economy compared to the economy more generally. I'll just change slides for you there.
Yeah, and that Fran data report is excellent. They've done that in partnership with IFA for a number of years now. And actually, I have an excerpt directly from that Fran data support, if you have access to that. So here, if we look at the US franchise sector, the franchise sector as a whole is at about 4,000 brands. It's stayed relatively steady at that level. So if you, the success rate of franchising in the US is pretty high, but not universal. I think some of the factors that impact market entry also impact the decision to franchise. And so we see franchising in the US, it's hold pretty steady at that 4,000 brands. This year, we're projected to have over 850,000 total franchise establishments by the end of the year, which is almost 20,000 increase. So if we just do a little quick math from the slide there, kind of one thing I'll note as we get into franchise development down there is say, net new establishments of 20,000 with 4,000 brands. If that's equally distributed, that's about 5 locations each. right, for each brand. Now, it's not equally distributed, but in terms of competition for really strong candidates and for franchise growth, there's definitely a battle for qualified operators and a need to have a really strong business model to compete for those really good candidates. I share here. Oh,
the
go
list
ahead,
of states. Yeah, those states are interesting that you've got there.
Yeah, so the list of states, what this states is according to the brand data studies, the top 10 states for franchise growth in 2025, which I think is both interesting, but also I'd throw a couple cautions on there. So the interesting things here are that this list has stayed fairly steady the last few years. It follows population growth. It's also based on kind of percentage increase. So if you look at just as one example and kind of the intricacies of the US market and understanding there is that if you compare this chart for 2025 to the 2024, there's one state that was removed from the list and one state that added. So all the Eagles fans in the room, which I know includes Bruce, will be happy to hear that Pennsylvania is a new state as a top state for franchise growth in 2025. Last year, you would have seen Texas on this list. But I just as kind of a bit of a side note there, it says like Texas has twice the population of Pennsylvania. So when you're looking at relative growth, this is good information, but also maybe the first level of inquiry with us. But we're definitely seeing good growth in the South and Southeast.
Yeah, and Texas does seem a state that I know there's a lot of talk, a lot of Australian brands sort of see that as a good entry point into the market. And so it's interesting that it's not on the list now, but I would have thought it seems to still be a hotspot for franchising more generally, and particularly for international entrants to come into this to enter via. To me, it seems like Florida and Texas are two of the biggest markets for new brands.
Yeah, I mean, there's a lot of things that are really attractive about both of those. Texas, I mean, it's a huge state with huge people. Texas is one of the easiest states to do business in. It doesn't have a franchise. Liz will talk about this later, but doesn't have a franchise registration. So from a franchise perspective, it's easy. If you compare that, like Pennsylvania is one of the hardest states to do business in. So lots of good factors of Texas, and then geographic proximity, lots of good flights, huge franchise community, particularly in the Dallas area, lots of big brands. So in terms of talent acquisition of people familiar with the franchise space, there's I'm from Minnesota, so not only as a fan of the Timberwolves, but also as one of the other sort of hotbeds of franchising in the U.S. I'll give you a little plug for Minnesota, but Texas is definitely a hotbed and a growth state.
Cool.
Sorry,
I jumped slide.
No, that's great. We're ready for the next one. So I think this is probably not different and maybe not particularly surprising to any of you, but franchising is active in a lot of different industries in the US. It kind of shifted, it used to be pretty much globally, but also in the US that food franchising was the majority. And it's still a majority in terms of the economic output, the dollars, but huge growth in things like personal services and business services, and other sectors. And so from every level of investment, from $10,000 to multi-millions and in different industries, there are brick and mortar, territory based, there's a really wide variety present in the market.
We're going to come back to a lot of commercial stuff later, so I might just jump over to the legal stuff now with Liz. Obviously, the first part of it, Liz, is getting set up in the legal requirements.
Yeah, for sure. So as Bruce said, we're going to jump into a few of the legal items. This is very high level, and we'll try to dig in on some of these, through the questions later, but hopefully it'll kind of set the stage. So when you're thinking about, you've got a great concept, it's super successful in Australia, you're thinking about going to the US, there's some preliminary kind of steps and questions you should be asking yourself. One is, do we need to create a US entity to act as the franchisor in the US? And the answer to that is, it may not be needed, but it probably is advisable. And that I say that for a couple of reasons. One is just a liability. You can, if you create a U.S. franchisor, it can help insulate any potential liability up the chain to, your Australian companies. There is a requirement, and I'll get into this a little bit later, under U.S. franchise laws to prepare audited financial statements of the franchisor. To the extent possible, you want to leave it at that franchisor level and not have to audit all your operations, particularly in Australia. So again, it's a good idea to have a U.S. entity act as a franchisor, and there's likely some tax reasons why this makes sense, although that would be a conversation with your accountant. The other thing you'll have to think about is your trademarks, your brand. That's what people, fall in love with and buy in a franchise model, is that affinity towards the brand. And you might have a lot of great brand recognition built around your brand in Australia, but you've got to make sure that one of the first steps you take in the US is to file the trademark registration here. And, a first step in that would be to determine whether you can register your mark here, whether there's obstacles to registration, whether somebody else has already done it, because there is times when we take brands overseas or we bring brands into the US where a registration is impossible and you have to change your name. And you want to know that as soon as possible, whether there will be any obstacles or if you might have to try to buy it from somebody else. So I'd say this is a really big first gating step as you even start to think about the US market, is making sure that your brand can be registered here and that it translates well into the US market just at a cultural level as well.
It's interesting, a couple of Australian brands, obviously with Baker's Delight and Cobb's, they had challenges with that, so they had to come up with a new brand. I know, Callum, this is before your time at Noodlebox, but I think the Noodlebox, they registered the trademark 15 years ago, but then they didn't go straight away, and so then you need to keep doing things in the US market to actually keep the brand. So I guess it's around the timing of, if you are looking to go, you need to go sort of get your trademark ready about a year or so beforehand, but not 15 years. So, because otherwise you've got to keep paying to keep it registered.
Yeah, and the trademark registration process in the US generally takes about 18 months from filing till you get full registration. Now you can franchise when you've applied. It doesn't mean that you can't franchise before then, but as a franchisor, you should feel comfortable that you are going to likely receive registration of your mark at the time that you franchise.
Cool.
And then another big kind of gating issue is, how are we going to expand in the US, right? We're in Australia. It's quite far away from the US. What is the best way to expand? Do you set up a company-owned branch in the US to test the concept, make sure it works in the market, create a track record? Do you look at master franchising, where you grant somebody the rights, maybe possibly the whole yes, but more likely, a state or a region in which they can act as the franchisor in that state or region and sub-franchise to unit franchisees? Do you look at an area development model or area director model, where you engage with someone and they buy the rights to act as your broker and support system in the US, but you still have direct franchise agreements with the unit franchisees? Or do you do even direct franchising in the US? And I think the answer to what vehicle makes the most sense for each franchisor will in part depend on the current skill set of your executive team, what your resources are. Some of these are going to require more of an investment to get started, what your timeline is, and what relationships you have in the US to try to evaluate which of these mechanisms makes the most sense.
Cool.
Next slide.
We'll come back to that. We're going to, if people have got questions around that, we're going to go into a bit more detail on that later.
So in the US, franchising is regulated at two levels. It's regulated at the federal level, which it would apply in all US states and US provinces, so like Puerto Rico, Guam. And it is regulated by the Federal Trade Commission. So the FTC can issue rules, and that's what this FTC franchise rule was. It was first implemented in the 70s in response to some perceived fraud in the industry, and there probably was then, and it was modeled in part after securities laws, with the idea that you need to provide pre-sale disclosure before offering or selling a franchise. So in that way, very similar to Australia, where you have to provide a disclosure document before you can sell a franchise. The franchise disclosure document, or FDD, contains 23 items of information. That's true for every franchisor. And so it goes through the history of the franchise concept. What is it you're offering? Any litigation history, information about officers and directors, a summary of key terms in the agreements, like fees and training, and the estimated initial investment. It also includes 3 years of audited financial statements. And this is a big investment for US franchisors, where you have to, there is a phase-in mechanism for startups in most, but not all states. But once you get going, you've got to be doing an audit every year and update that audit every year. And those financial statements have to be audited in accordance with US GAAP, and with a few narrow exceptions, really by a US auditor. So you can't just hire your, even an international accounting firm. There needs to be specific procedures in place if you're using an auditor that's not based in the US. A big one for franchise orders coming to the US is that you can't share any financial performance representations, earnings information, any information about how your historical units have done in the past or how they may do in the future, unless it's part of the FDD, it's part of the franchise disclosure document. So the kind of the million questions you get about how much money can I make? How do you think I do in this market? You can't answer those. You can point them to information in your FTD. But here's the catch for foreign franchisors coming to the US is that state regulators and generally do not want to see data based on performance in other countries. They do not believe that that data is representative of what a brand could do in the US. So this kind of ties back into how do we start expanding in the US and why a lot of franchisors do start with company-owned units, in part to establish this financial track record that they can then share with prospective franchisees. So once you create the FDD, you have to provide it to a prospective franchisee at least 14 days before they sign an agreement or make an payment. There's no registration, though, on the federal level. Though the obligation is to prepare and provide the FDD, but you do not register it at a federal level. And there are potential limited exemptions from disclosure under the federal rule that exist that can be kind of nice when you're talking to really big players. So very, very large franchisees that maybe, have a net worth of 7 million or very large investments, those type of exemption or transactions may be exempt under this disclosure law. Next
Cool.
slide. So as I said, it's regulated on 2 levels. The federal level provides the floor, but states are free to add on to the requirements that the federal FTC franchise rule provides, and many states have. So there are 14 states in the US that require franchisors to register with the state before offering and selling franchises. Some of those registrations are very easy to do. So some states really just want their fee, and then they file the FDD and you will never hear from them, like Indiana or Wisconsin. Some states will take a very close look at the FDD and provide comments, based on that particular examiner's interpretation of the FTC rule and state requirements. And they may issue, especially for new franchisors, very long comment letters about what they'd like to see changed and questions that they might have about your program. And those states tend to be, Maryland, California, to a lesser extent, Virginia and Minnesota, but for sure in Illinois and Washington are the most active right now. And Washington will go even farther and ask why, certain provisions in your agreement might be fair. And you kind of have to get into this argument with them that they exceed their statutory authority, but you want to be registered. So you play nice and you try to work through the comments and get it done. When you file these FDDs, they look very closely at your financial statements, and in some cases, they require financial assurances. So they might require that the franchisor defer collecting the initial fee or place a bond or an escrow of the initial fee until the franchisee opens if they don't feel comfortable that franchisor might not be able to fulfill its pre-opening obligations. That condition would only apply in that state. So it would only apply if Washington imposes it just to Washington franchisees. The states require, just like the federal law will require you to update your FDD at least once a year, the states require that these registrations also get updated once a year and you refile. So they all have to happen within 120 days of fiscal year end. but there might be a greater frequency if there's a material change in the information in the FDD. You might have to update mid-year and refile. But if not, then it's just once a year. So generally in March and April for most franchisors. So that's the state franchise laws. There's also two other groups of laws that layer on to franchising. Ones are called business opportunity laws. These laws generally govern things like vending machine routes or multi-tier marketing. And generally, if you're a franchisor, you're exempt, but a few states do require that you file a notice in those states saying, hey, I'm not subject to the biz op laws. I'm a franchisor. I comply with those laws. So there's a small handful of states that would require that, including Texas and Florida, but they're very easy. It's, a simple form and you're done. There's also several states that have state franchise relationship laws. So while up until now, we've really been talking about laws that govern what happens before you sell a franchise, these franchise relationship laws may impact your relationship with your franchisee after they sign a franchise agreement. And so these states, some of them are the same as the 14 registration states, some are different, but they say, hey, no matter what your franchise agreement says, you have to give 60 days no opportunity to cure, or maybe a longer wind down period, or you can only not renew if you have good cause not to renew. And so each state law is a little bit different, but they generally govern your ability to refuse a termination, not renew, or terminate a franchise. And these are all very important because the consequences of non-compliance, particularly in a state with a franchise registration law or franchise relationship law, can be material. I mean, it can go beyond damages. It can go to punitive damages. It could be rescission, which is putting the franchisee back in the place it was before they bought the franchise. You could have state investigations where they issue fines and you have a disclosure in your FTD. There's a whole myriad of damages that are available. So while it's kind of a lot of little rules to keep track of, it's really important that when you expand into the US that you have somebody on your team that is willing to take this on and kind of own it and keep track of all these different rules and help ensure compliance.
Cool. Do you want to move on?
Yep.
We're ready to go. So what we might do then is we'll not loop back then. I might just take that. Stop sharing. We're going to look back to the structure of going into the market. So obviously there's master franchising, there's area developers, direct entry, company-owned stores that you talked about before. But so let's sort of look at company-owned. If you are going to open your own locations, Liz, what sort of things? I know some of the Australian brands, I think City Cave did that in Florida and then open up a franchise in Dallas. And what's the sort of things that you should consider if you're going to open your own locations as a company-owned location?
Yeah, I mean, I think if you have the time and resources, opening a company-owned location or two in the US makes a lot of sense. And the reason I say that is that it really lets you test your product and what you're delivering to the market in the US in a real tangible way, right? You're not guessing about what's going to work and not going to work. And there are significant differences in doing business and culturally here, right? It also lets you build up that track record that I was talking about. It's really hard to sell a franchise without being able to share any financial information. It just is. And if you have a year of data from a company-owned location that you're then able to put in your FTD and share with prospects, it's going to make the sales process better. I also think just generally it leads credibility to US franchisees, particularly if you're doing direct franchising, to say, hey, we're doing it ourselves. We've made sure it worked in the market before we came to you, rather than just guessing. And it sets you up to, I think better support direct franchisees in the market if you have your own units there.
And I guess, leading into that, so direct franchising. So, if we go down this path, so we've opened up our own, 1-3 locations, and then we decide to direct franchise. What sort of things do you, from a legal point of view, particularly, do you think the franchisor should consider?
With direct franchising, you're gonna be the franchisor just like you are in Australia, right? So it's your responsibility to comply with all the franchise laws, but you also then have the ability to protect your brand better, right? And control development and be a better gatekeeper of who comes in your system. So I wouldn't say that there is something particularly unique under US franchise laws as it relates to direct franchising, other than you are the, you versus a master, right, where you're delegating a lot of those responsibilities to someone else.
Yeah. And I guess, Ali, you've got to think about if you're doing these things from a commercial point of view, you're taking on more risk because you're all signing a lease, you're employing staff, you need to get across leasing laws, employment laws, all those sorts of things as well. But I guess, the risk and reward of opening your own locations and direct franchising, Ali, you've worked with lots of brands coming to the US. What do you say to them when they want to go down this path?
Yeah, Bruce, it's such a good question, and it's always an interesting conversation. And the conversation also circles back to, often what I hear is, oh, well, I want to do a master franchise for the US. And I feel a little bit conflicted sometimes when I talk to people because, as you shared, I was president of International, and I think the idea of a master for a country is really appealing. And in most of the world, I think that strategy has a really strong approach. But for some of the factors that Liz mentioned in the US, master franchising can be really difficult. And there's some logistics around things of you still, the ability to find a master franchisee who has the experience, knowledge, and capital to truly grow a brand across the entire country is pretty limited. I think you might be able to find a success case or two, although I'm looking. So if anyone knows of one, that would be great. But I think what you don't see are the times that people tried and failed, and those sort of drop off the radar, and you kind of don't hear about those. And so I think I'm answering the opposite of your question in terms of direct franchising, but that's because the first question that often comes around is, oh, I want a master franchisee, and why not? And again, in most of the world, that, in a lot of other countries, I think that is a really viable approach. But the challenges of the US market, between the size, the scale, the scope, the prevalence of franchising, the sophistication, and just variety of brands and franchisees, and the expectations of your potential investors, and to some extent, maybe the expectation of consumers, like some form of direct franchising and testing the market is, if you're looking for long-term success, my recommendation would be wait until you make your trademark registrations, preserve your opportunity to enter in the market, and then build your company to a point where you have the ability to make an investment or look at some really thoughtful partnerships. But so direct, a direct entry in terms of opening units yourselves. There's a lot of information about commercial realities that are different between the US and Australia. So the localization of your brand and the understanding of, there's differences from real estate terms. If you ask an American if a landlord, if you can provide a bank guarantee for your security deposit, that's not a thing. And so, just all the, that's just one small example. So, again, I think some success stories, but that opportunity to, in some fashion, do some test units in the US market, and then be really thoughtful about who your partnership is with that. There's no one right way, but who are you partnering with, in what part of the country, how are you going to support it? And I can see on the call we have a lot of really experienced people, so don't think you're hearing anything, but the devil is in the details in setting yourself up for success. And I would not underestimate the importance of that regulatory framework in terms of the financial information that you can share pre-sale. And even though Australia has, also extremely regulated from a franchise disclosure perspective, the approach is from a mindset perspective, and the risks in how and when you share financial information is different in the US. And so being able to prove out your successful operations and make those local adaptations is pretty key.
So I think what you're saying there is, we'll get more into master franchising in a sec, but if you're going to do direct entry or company-owned locations, there's a lot more work on your side. So, which means actually getting on a plane and flying over and spending a lot of time actually in the market and understanding. So if you are going to open up your own retail site, you need to understand the leasing laws, but you need to understand commercially what sort of things is going to fly. Like, how long do I need to take a lease? Where's the best place? So you still need partners on the ground, because you need people to help you find the sites. You need people to help you find the franchisees. But there's a lot more actual work from from an investment point of view in actually understanding the market. And so if you are going to the US, it is very different from state to state. And so understanding multiple states all at the same time can be quite challenging, given understanding the real estate issues or the franchising legal issues in for that particular state. So, that I guess if you are going to do that, sort of pick a couple of states, maybe some on your list there, Ali, and say, let's pick a couple, one or two, and let's get that to understand those markets, because the market's going to be very different in Texas to Florida to California to, or Pennsylvania. So you need to understand that. And then we get to master franchising, and I know, Ali, you've already touched on it if you were going to take the whole country, but what about a master franchising state by state? Is that something that you see happen, where international brands come to the market and grant the rights just for Texas, for example?
Do I see it happen, or do you see it as a successful national sustaining business plan?
Either or. Yeah.
I see it happen. I think it's really hard for a lot of logistic reasons, particularly with master franchising, to make that work. And not just for international franchisors coming to the US. I think the same is true for domestic franchisors looking to expand across the US. That's not specific to market entry. But there are some dynamics that are just really challenging. And if you're doing a regional approach, quite frankly, you're still taking on a lot of the responsibilities that you would if you're master franchising anyways. So if you have regional franchisees, who's managing the website? Because you have one consumer market, you're still going to have to do some coordination around national marketing, the website, a lot of the resources, the vendor, and so, I mean, in my view, and there's no one path to success, but if you're looking at what has for those of us who have been in franchising and seen things happen and seen things that succeed and don't, if you're playing the odds, my experience has been master franchising regionally or in the US can get you market entry, but is not likely to get you long-term sustainable growth in the US market. And you will either, most brands who start in that vein either pull out of the market or end up in reorganizing or doing something different, and often at a much more significant cost than if you took a different approach in the beginning.
And we won't talk about litigation, Liz, but yeah.
Yeah, I was going to say, I'll also note it doesn't necessarily make your compliance obligation any less, right? Like when you sell a master, you still have to provide an FDD for that master sale. And then your master franchisee needs to include data about you every year in their FDD. So even if you sell all 50 states, you're still needing to get an audit done so that they can include it in their FDD. I mean, it doesn't necessarily make the compliance lift easier as well. Like if people are thinking it's the fastest way to do it, I don't know that that's necessarily true.
Yeah.
Yeah. Exactly.
Yeah, and right, that's right. And I guess if we look at master franchising, semi-absentee. What about the other one is the joint venture. So finding someone in the US to partner with, essentially, who is your sort of person on the ground, but still having equity in the business. Is that something, I'll maybe go to you first, Liz, and this one is that something you're seeing a bit of? And I guess it moves us out of the franchising laws into other laws as well to think about, from, if we're setting up companies and going into partnership, shareholders or stockholders, operating agreements as well.
Yeah, no, I do see it. And I even see it domestically too, where JVs, where some, you want that local partner, or you found somebody who you think is going to be really useful as you grow the business. But Bruce, to your point, absolutely. It's like, where is the business going to be located? Where are they going to be? Where is it going to be incorporated? What state law is going to apply? I think those operating agreements can take a very long time to negotiate because there has to be clear exit paths for both parties if it doesn't work out the way they are going to. And I should note that it doesn't necessarily avoid the application of the franchise laws. There's been plenty of situations where courts have found that, oh, you're calling it a JV, but it really is a way to sell a franchise without providing a disclosure document. And so in a lot of JV contexts, the franchisor may still be providing a disclosure document because they aren't able to structure the deal that they want in a way that would avoid application of the franchise laws or comfortably avoid application of the franchise laws.
Yeah. What about you, Ali? Is that something that you're seeing more of, people finding a partner in the bit to set up in the US so they don't have to do it all and jump on planes themselves all the time?
I think the idea of a JV, there's so many different ways to do it and it has a lot of appeal. I think Liz points out rightfully that it is maybe a more sophisticated setup, but I have seen it work really successfully. I've used that in the opposite direction in entering other markets, and similar to choosing your franchisee, your how you establish your partner is important. I'd say take a critical eye to the true experience and value that a potential JV partner is making you and the size and scope of your JV. But if you're in a position to make an investment and you have the resources to manage some of the sophistication of a JV, you have to collaborate on financials. There's tax things. There's, you're navigating, but for likelihood of success and the market opportunity, that is I think it's a great option, but proceed with caution and do it very carefully. It also has the benefit of balancing that local knowledge and control, a little bit of mitigation of some of your capital investment potentially, but retaining some control. And, do you have majority ownership? Do you have minority ownership? But shareholder rights tend to be stronger than, contractual rights or other relationship rights. And so there's a number of layers there that can be really helpful.
And another approach that I know a number of Australian brands have attended the multi-unit franchising summit and other things where they're looking at, so rather than just direct entry where they're trying to find one franchisee, they're finding people that have got the resources to have multiple sites or a whole area. Is that something that, again, Liz, I'll start with you. Is that something you're seeing, and what sort of, role that are those area developers or multi-unit franchisees playing? How's that working out?
Yeah. A lot of franchisors are using multi-unit development these days. And I think it is kind of if you can do it, it's the gold standard these days to expand, right? Because you don't have as many franchisees to support. You don't need as many to grow. But like Ali's been saying, it's the right partner. It comes down to the right franchisee every time. I think certain industries are a little more sophisticated when it comes to multi-unit ownership than others. Like fitness, for example, actually is a very sophisticated multi-unit or PE ownership groups out there that are looking to invest in other fitness brands. Some segments of food are the same way, whereas maybe you get less sophisticated multi-unit owners in some of the service-based businesses. You can find them and they buy a lot of territories, but maybe don't really know what they're getting into. So I think that it can depend on the industry you're in as well, and whether you're looking for kind of institutional investors or folks that are really just want to be on the ground operating it.
Cool.
Yeah. And Bruce, if you're talking about like the multi-unit show itself, if that's, if you're looking at kind of where and how do you find franchisees and where and how do you learn about those more sophisticated operators in the market, my experience has been the multi-unit show is really the only kind of trade show expo or event where you have a significant number of multi-unit owners. But I would also say that the owners there are sophisticated operators and investors. And so, if you want to find a good partner, you need to be a good partner. And so I think it's really important to present that compelling opportunity, and that whether you're going to walk away from that show with deals really depends on what homework you've done and what foundation you've set for being a good partner. And so if you're walking into the multi-unit show and you have existing units in the US that are performing at a high level, you're you're in the right place. If you're walking into that show to learn about what are the franchisees looking at, what are some of the other competitors in the space, great learning opportunities. But if you're walking in and hoping to find, I mean, I think we all know my opinion at this point, but to find a master franchisee who can franchise all of the US for you, and you haven't opened anything yet, you're talking to fairly sophisticated business people. And so maybe there's someone in the room. But I would those attending is not a huge financial investment, but exhibiting in the show can be a bigger investment. And so if you're going to take that, I'd take the time to do your homework on setting the foundation and kind of put yourself in a position to be a competitive offering when compared against other US opportunities and competitors. So and also be careful about putting it, can be one component of your development strategy, but trade shows in general, and especially that one, you might not want all your eggs in one basket.
Well, and maybe before we go, we are going to talk about, how to find franchisees and, whether it's brokers or franchise sales organizations next. But maybe if Carlos or John or Callum or any of the others that have been into the US and are attending these sorts of events, what, your experience with the structure of how to enter the market and what's worked for you so far. Is that, Carlos, you see you're out of the car there? Yeah,
I've just got into the office. Thank you, Bruce. Look, I suppose from a Chow Time perspective, we had the fortune that we've had some presence of the Chow Time brand in the US for quite some time. Interestingly, that a number of the topics that we've spoken about today in relation to whether it's a master approach, whether it's a single unit approach, whether it's a multi-unit franchise approach, have all been part and parcel of our legacy aspects that we've been addressing over the last 2 to 3 years, particularly around where master agreements had been awarded, and then we've had legal issues with masters and sub-franchisees, etc. And the learning from that is that from a franchisor perspective, we didn't have the rigor and the process to manage that. Where we are today, we took a commercial view to invest in corporate locations in LA. But if we take a step back before that investment, we worked with Fran Data to assess the opportunity in the US. Where were we seeing? What was the regulatory framework across the different markets? We worked with BDO in relation to assessing the size of the prize in the US. What type of investment was going to be required from the shareholders to reinvest into the US. So I suppose the key for us was investing in a lot of research, a lot of data, and a lot of market visits to assess the competitive environment for boba and bubble tea in the US. Fast track to where we are today. We have registration, I think, in 16 of the 17 states. We're currently waiting, pending current approvals of our submissions. This year is the first year we've actually had an item 19. So it was interesting, the mention of the revenue performance of the financial data in the FDD. We've been fortunate that to date we've been able to work with Fran Devco, which is our broker appointed firm to assist us with identifying multi-unit franchisees and then funneling those investors through the funnel. A majority of our investors, as I said, multi-unit franchisees, and we're starting to deploy those units now. Interesting what Ali said about the access, or a couple of points. One, access of retail property. We've found it extremely challenging across a number of states, particularly through key markets like Dallas, in Texas. There's only a 2% occupancy in retail at the moment, and the 2% that is available is the 2% you don't want. So navigating that against the backdrop of your franchise agreement, which has, in ours, we've got a 12-month development hurdle. So working with our franchisees and with our property firms to find properties has been a challenge. And I think the second piece for us is the cost of build out in the US, notwithstanding how long it takes, but the cost of build out's been a real surprise for us. Dollar for dollar, regardless of the exchange rate, significantly higher to build out a Chatime location in the US. So we probably 18 months ago now, we kicked off a project where we now offshore modularization or modular units of our stores, whether they be a kiosk or an inline store. We were, so John mentioned this earlier, we were building these out of Xiamen in China prior to Trump's appointment. We've now had to pivot and we're now manufacturing those out of Taiwan. We've still got a tariff implication, but significantly lower than out of China. And then we now centralize those out of our DC in Kansas, and we draw down on those when the GC requires those. And that has put significant downward pressure on our cost of entry in the US. So much so that this year's FDD is our sharpest FDD that we've had in the history of our brand in the US.
There's a question come up while you've been talking, Carlos, around the recruitment process. So I might go back to Ali and Liz about recruitment of franchisees, and I'm happy for John and Carlos to comment. But the broker, the different layers of and the sophistication levels of brokers and franchise sales organizations in the US is a lot different to Australia. So what sort of things do you see, when people are entering and partnering with people to help represent their brand, like Franchise DevCo or others? Ali, how are you seeing that? Do you recommend that people use the broker groups if you're a foreign entrant because they know the market, or does that create a whole lot of other challenges?
Yeah, such a good question. And there are a lot of layers in there. I don't know if we have enough time to address all of them, so I'll hit a couple high points. But from my experience between Australia and the US, I think franchise development generally is more expensive in the US. There's a really robust supplier network at all levels and for all strategies of franchise development. So for those who aren't, I think brokers and franchise sales organizations are not quite as prevalent in Australia as they've become extremely prevalent in the US. Although I'd still, the latest statistics I've seen, it's still roughly half of franchisors that are working with broker groups. And kind of so that there's a lot of conversation about it, but you want to think really carefully about it, because if you're looking at all the different opportunities you have for your franchise development and the costs and the cultural aspects, there are different factors for different brands and different things, but not all broker networks are created equal. Not all franchise development people are created equal. Not all lead portals are created equal, right? But if you look at some average, franchise brokerage and FSO is an extremely expensive way to grow your brand. So you will get franchise sales, but the ability to then use your initial franchise fee to help you fund support for franchisees is that's something you really want to think about in terms of the initial investment you're bringing in. So again, probably not enough time to go into all of that, but in my experience, again, looking at Australia and the US, in the US, franchise development can be lots of really robust sales channels, suppliers of all natures, whether it's marketing agencies, actual outsourced sales, in-house teams. You have a plethora of choices in who you partner with. So partner carefully. You have lots of choices, partner carefully. But also the experience has been, I think, it really, really varies. So if you're looking at just costs in franchise development, and the average cost per sale is now up to something like almost $14,000 cost per sale. And that's on the marketing costs. That's not including your internal headcount or a broker fee, right? Now, a brand I'm working with right now, last year we sold more than 24 franchises at an average cost per sale of less than 1,000. And so that's probably one of the best experiences that I've had. And in the past, I know of another brand that had a budget of maybe $250,000 and sold 0. So there's a big difference in the performance, and won't be a surprise to anybody here. It sounds like you're all sophisticated franchisors. The stronger your product, the stronger your value proposition, the lower your cost of acquisition of franchisees. And so so there you go.
And is there anything from your end and from the partnering again with any of these, marketing companies or brokers or franchise sales organizations?
Yeah, I mean, I don't have a lot to add to what Ali already said.
Yep.
She outlined it really well. I mean, I think if you use an FSO, a franchise sales organization, or broker, 80 to 100% of your initial fee will go to between those two, to them, because these FSOs all work with the brokers. The word of caution I'd have that I see come across my desk sometimes is sometimes there are FSOs or broker organizations out there that want a percentage of your ongoing fees as part of their compensation. So maybe they charge less, they take a smaller chunk of that initial fee, but they want a chunk of those ongoing royalties for a long time. And my advice there is not to do that. Because if the relationship doesn't work out, maybe you've paid your FSO a monthly fee plus the broker or the initial fees, but then you're done, right? Like there is a point in when that relationship can end. Whereas if you're paying them a portion of your royalty every month and they performed a sale, 6-7 years ago, that's going to be really frustrating for you, and could, lower the value of the ability to even sell your system in the future.
I've done a really bad job of timing, and we're right on 9 o'clock. I will, if anyone's got a question, I'll do the last one question. If there's anyone that has a question that we didn't get to, I didn't get to finance or private equity, and I didn't get to talk about Trump and tariffs in great detail either. But I'm sure everybody's a bit sick of that conversation anyway. But if there's anyone else that's got a question or a last comment before we throw to Ellie and Liz, John or Carlos, anyone else? No, we're all good. Last call. How is the US franchising world? Or should we still be getting excited about coming to the US despite the Trump putting tariffs on even Australia?
Yeah, I mean, I think so. I think, franchising it's a resilient industry. I think the prospect for franchising in the US is good. I think it's probably an easier time to bring foreign brands to the US than, frankly, a US brand going overseas.
Yeah. Ali, what do you reckon?
I would agree with that. Look, I think it really depends on short-term versus long-term planning. And so long-term, the size of the US market is just hard to argue with what the opportunity is, but there are some short-term challenges.
Cool. Well, thank you very much. Thanks, Liz. Thanks, Ali, for taking the time, preparing, and giving us your insights. Thank you all the people that have joined today, and for your questions and comments on the way through. Thank you very much. Thanks, Helen and Lisa at the FCA, for allowing us to put this together. Thank you. Enjoy your day.
Thank
See you later.
you.
Thanks, everyone.
Thank you.
Thanks, everyone.
Bye, cheerio.
Yeah.
Yeah.
Thank you.
Well, there's an AI. Thanks, guys.
Yeah, thank you for having me, Bruce. I really appreciate the invitation and the opportunity. And thanks, Ali, for suggesting me.
No
Thank you
worries.
both. Yeah, thanks, Bruce.
No problem. Thank you very much. I'll obviously the ones a lot of the franchise brands that haven't gone to the US that I thought would be there didn't show. So there was so hopefully they listened to it. Some of them, there was probably another 10 brands that I thought were going to be on the list. There was 15 out of the 20. So, but obviously the ones that were there, they're already there. But Carlos and John have got big opinions on how to grow it, and Noodlebox, they are, so Callum is looking. So I don't know if you've reached out to him, Ali, about what they're doing, but they are actively looking to go into the US market in a different way. So they haven't gone so well at what they're doing. So I'm not sure who they've partnered with and what they're doing, but have you got Callum's details, Ali? I can just connect you if you
I do.
His email.
Yeah, no, I have. Yep. Through some of the IFA programming, I do. Yeah, that would, and if anybody reaches out and wants to have a conversation, I'm always open to a conversation. I love talking franchising and market entry. So happy to provide some follow-up support if someone reaches out to either of you.
Yeah. I'll talk to Lisa. Obviously, when we run our own stuff, we do an email, we send it out, we send out the slides and all that sort of stuff. I'm not 100% sure what the FCA do, but I might give Lisa and Helen a call and see, because they'll send the recording out to people that register. So but I'll ask if they can send you your details as well.
Okay, that sounds great.
Cool. Thank you very
Thanks,
much,
Bruce.
guys. See you.
Have a great day.
Evening. Okay, bye.
Bye.